What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 2nd of 2019. Well, folks, I hope you all are having a great start to your month wherever you are, and in today's video, we're going to be focusing on a few key things, from taking a look at the price action of cryptocurrency and equity markets to diving into some of the most recent news, such as the Block.One conference that was hosted in DC recently for the EOS ecosystem, and also talking about the probability of a Fed rate cut, actually reversing monetary policy to ease markets. So we've got lots to discuss, but I want to let you all know above everything that we actually have a sponsored interview towards the end with Masterworks.io, which is a really cool platform that's trying to democratize the opportunity to invest in luxury or blue chip art, which I never would have thought was possible, not to mention has outperformed the S&P 500 by 180% over the last decade. So if you guys are interested in that, please stick around. It does support the channel, and hopefully you guys will enjoy the interview. So, taking a look over the market, over the last 7 days, guys, crypto markets have been still overwhelmingly positive with a lot of altcoins in double-digit territory. Some of the market leaders right now are slightly up. Bitcoin has corrected and actually regained a lot of the losses that it had taken on over the last few days, and it looks like we still could possibly push for slightly higher levels. Again, as you all know, my short-term positions, I've moved out of most of them in this case. I might have a few left, I guess, in some of my altcoins, but again, I have stops set. But for the most part, in the last 24 hours, we have regained some of those losses. And as we'll take a look at the technical patterns, it does look, seeing as we have a few altcoins above Bitcoin and Bitcoin regaining some of its losses, that we might push for slightly higher levels, forming an ascending wedge, which will eventually lead to a breakdown. So we'll take a look at that in just a moment here. But if we take a look at the last quarter for overall market cap, again, still pressing quite high. You know, we're still getting close to that 280 mark. I would guess around the $300 billion mark is where we're going to have some roughness, because that will be a 3x from the lows, guys. I really want to press. In just a matter of a few months, guys, we have been able to 3x this market. It's really good to see. Then again, we had a lot of room off of the pullback we had in crypto markets. But again, I want to know if a lot of this is justified, if we've really got the valuation coming in just yet. I think a lot of the pressure from the China trade war and all kinds of macro factors, the cutback in monetary policy, is going to provide a lot of room for cryptocurrencies like Bitcoin, Litecoin, things that are seen as kind of hedges and have a well-established community. But I'm curious as well if we can continue to see some of the upping of the ante and the DeFi movement, which I'm really excited about, and Ethereum and things of that sort. So I really think those are the two serious pressures going on here. I don't see much else really pushing up markets substantially. And then we're going to have the wave of speculation that I think comes in when prices start to move much higher. And that's just going to be people, kind of FOMOing. Alrighty, so let's go ahead and take a look at RX here and take a look at the chart. So as you can see, again, over the last 3 days, we have started to rebound off of the pretty stark sell-off in the stop hunt that came through. We'll take a look at the hourly here in a minute. But again, focusing on the daily, there's a few key signs that I want to focus in on. First off, again, the parabolic uptrend. Again, we need to keep that momentum, and so far, it does seem like from the sell-off the other day that, it's proven that it wants to have one more leg up. I'm not going to deny that. If I look at this chart, it tells me that it wants to go up here to the line of resistance around 7,200, possibly over the next few hours, next 24 to 48 hours, things of that sort, very short time frame. So I wouldn't mind doing a speculative trade that's close to a $500 gain there. It's good to see. That would be nice to have as a trader. But again, there's two things that we keep in mind. A, this is forming a clear ascending wedge, which leads to a breakdown. So we might, break all odds and break through to 10K, who knows? But I'd say that the probability, and where I'm going to stand in my kind of ground in this case, is that it's probably going to hit resistance somewhere up there at the similar range we've seen sell side before, slightly higher because it's an ascending wedge. So you set higher highs, but at a slower rate than you do with your lows, which is eventually going to lead to pressure and a squeeze downward in most cases. That's why it's seen as a bearish indicator. And we've talked about that in our trading tip series. And then you have the parabolic uptrend. Third factor you have is declining volume, guys. Yesterday's volume on some of the major actual liquid exchanges is pretty pitiful. It's showing that we're not getting new entry or serious new entry of liquidity. So the volume that we had yesterday, if you were to do it on a price-weighted basis, is very similar to what you're seeing down here, right? Where sometimes you have some of these higher days of volume, but you had a lower price range. And this is the thing that I always try to press to people. In the short term, you can have prices keep pushing up and have, less liquidity over time, and not enough increasing liquidity to match the increasing price. That can happen in the short term, but for the long term, it's not sustainable. You need new entry of liquidity. And if you don't believe me, just take a look back at what we saw during the bull run in regards to Bitcoin. when we actually take a look at the previous price performance of Bitcoin, we can actually see that there's a big increase in not only the amount of Bitcoin being traded, but obviously the price range. So again, we have that correlation over time of an increase in the price, but also an increase in liquidity in this case, i.e. in this case, more Bitcoin being traded to sustain it in the long term. And right now, there's just nothing too clear as to what's driving Bitcoin. So I think a lot of investors are waiting on the sideline. I know we've talked about, a lot of people talked about a FOMO coming in, but I think that we can't really get that FOMO until we get more transaction volume in the network. I think people look at some of the fundamental indicators and they get really worried about it. What I think this is, I think it's some buyers coming in, I think it's some speculators, but really, I honestly am actually genuinely interested in the fact that this could be people hedging in this case with, a lot of foreign countries who are worried about the trade war going on, the pullback in central bank monetary policy, things of that sort. All right, so that's all I'm going to look at in TA for now, guys. Nothing too exciting going on in regards to crypto markets. I mean, there's always something exciting going on, but I want to focus a little bit on the recent Block.One announcement. And this is a really good tweet that was retweeted by Dan Limmer. He's always on Telegram, as most of us are in the crypto space. But this basically summarized what went on at Block.One. I really think, as Dan Limmer, I think actually said in the tweet, kind of summarizing the significance of what was discussed at the meeting. I actually sat there and watched it. And I have to say that I was interested in some things, but at the same time, a little bit disappointed. Now, that's not to be negative on the EOS ecosystem, and I'll explain my rationale for it. I think EOS is very interesting. They sure as hell raised a lot of money, so they must be doing something interesting. But going through, there's really 5 key things that they discussed that they're working on. So first off, they did a partnership with Coinbase. For those of you who are well aware, you can now earn EOS in this case, much like you can a lot of other cryptocurrencies. You have to basically apply for it, and they not only are going to have their standard things that I think let you earn up to $10 worth of EOS, which is pretty cool. It's free crypto, why not? But along with that, they're going to have advanced lessons, which is something that I think is relatively new to Coinbase that are going to be in relation to development and getting a more in-depth understanding of EOS, and again, probably let you earn more EOS, which would be really, really cool. So I'm looking forward to that. So if you guys want to find out more of the details on that, I'll keep you guys in the loop on it. You have to basically go and sign in your Coinbase account and you have to go through and basically apply for it. I don't know why they're doing that right now, but that'll basically let you get a notification when you're ready to be able to do it and earn your EOS. Now, I think that's cool. And along with that, they also have this thing where they have a company called Yubico, and basically it's going to be a new custodial solution where they have had 0% hacks on their devices. You'll be able to basically store your EOS in this case, which is going to be really interesting. So it says Yubico is the behemoth in authentication. It is ready to go. Corporations and many average people are to use these devices. So basically, you're going to have a lot of corporate entities getting into this space, building dApps, leveraging this kind of stuff, storing their crypto, things of that sort. So it's good that they have good key management. The killer EOS dApp, which was really, I think, the cornerstone of this announcement from Block.One, and that is Voice, which is their new social media app. And we're going to dive into that in just a moment. But going through the other ones, I mean, there's nothing too big. There's a variety of new identity applications out there that are going to be competing to be the identity app for the EOS ecosystem, which is nice. And then also launching VM and performance improvements for the EOS network, which, again, good news. But the big thing here that we have to focus in on is Block.One's new launch of the social media platform Voice. And I have to say 2 things, one very positive and one kind of negative. One, I really love the idea. If you actually go through the UI and everything, looks really good. I don't know if they have, this is the logo here. I don't know if they have any pictures. I guess they didn't put any in the CoinDesk article, which I wish they would have, but they showed some actually in the video. And if you guys want to watch it, you can go over here. And the thing is, there's a few things that I noticed. So the positive note is that the UI looks good. The concept is very interesting for decentralized social media. And that is that I think it's an improvement on top of existing social media applications. And that is that it's focused on its user base and amplifying voices of quality content that people enjoy. So what do I mean by that? We basically have voice tokens in this case. And you don't really, at the start, you don't have to go buy voice tokens. You don't have to do this or that. You basically earn them for people liking or positively engaging with your content. So if I make good videos and post them to the voice platform, you guys might like them, and I get more voice tokens, and I can amplify my posts, whether it be the one that I have recently posted or, a future post down the line where I want to spend my tokens, all right? It's a very simple model, and I think that it's very beneficial and kind of the way of the future of social media, right? But here's the problem. This model has been used on a few other existing platforms. For example, Minds.com. I've talked to Bill Ottman, who founded Minds. I've used a lot of these alternative platforms, and they have the exact same model with the Minds token. Minds token basically boosts the platform. Now, the benefit that EOS will have is that everything is probably settled on chain because they have the scalability to do it. Not to mention, they have the identity applications, so they'll be able to take out some of the spam and the bots. And outside of that, you've got the EOS ecosystem there right off the bat to get yourself a nice steady user base. So it might be good, but Minds has got like 1 or 2 million users. They're going to have to provide a much better experience. And one small thing that I have to say that I really was just kind of irked by, I know some YouTube channels do it for professional reasons, but I got to say, for a decentralized network to block out the like to dislike ratio and comments on their keynote video, which only has 5,000 views, seemed a little bit petty to me. But I am excited to see what goes on. I know Dan Larimer is a genius. I've loved the previous works he's done. If you guys don't know, Steam it as well as BitShares, which a lot of people still don't really know about, are two of the most active blockchains out there. They've processed a vast majority of the blockchain traffic we've seen, and I do admire what Dan's doing. I just honestly think with the capital they've raised, that if this is all we're getting with Block.One, I mean, this is a little bit kind of shocking. But then again, there's other portions of the ecosystem that we're not really focusing in on. This is just Block.One. So anyways, that's my summary of it, guys. Love to know what you all think down in the comments. And again, not trying to talk negative about the EOS ecosystem, but I do want to see more. I was expecting a lot of big government partnerships. That was a big thing that was rumored for a long time. And it seems like a lot of the rumors were kind of hyped, and you can kind of see that in the EOS price here. It's the second worst performing crypto over the last 24 hours. So all right, going on to talk about the probability of a Fed rate cut, not a rate hike, a rate cut to ease monetary policy. As the Fed has been extremely hawkish over the last few years, keeping rate increases intact, reducing the balance sheet at an autopilot rate. What we're now actually seeing a probability that some believe we're going to have a rate cut here in June. And I not only see a very substantial possibility of in June, if not in June, it is very probable in July. And you can start to see that increase here. And this is basically a tool at the CME group where you can basically, take a look at current, basically futures predictions as to whether or not the Fed is going to raise rates, keep them the same, or cut rates, right? There's really 2 things that can happen. In some cases, you actually get more options depending on the point basis, if you believe it's going to get cut more than some people, right? And it usually moves in these quarterly basis, these 25 basis points. And you can see here that it's almost a half chance in this case, if you're taking the 2 possible rate reduction areas, that people believe it's a 50-50 in July as to whether or not we're going to get a rate cut. And as we go along here, it starts to outweigh and become very clear. I think markets are realizing that in the next month or 2, we're going to have a rate cut. It's almost set in stone. And the way we can be confident of that, guys, is taking a look at the price action here. No matter if you're looking at the Dow Jones, the S&P 500, or the NASDAQ in this case, which we're taking a look at, we had a clear double top or triple top in the market. And stocks are selling off just like they were before because we have all the same fears we had before. We have a more hawkish Fed in this case who's not looking like it's willing to cut rates, or at least it hasn't done it so far. And with the cut in global liquidity, the scare tactics of the trade war in this case that have been kind of weighing down markets, it's obviously looking like we're not only going to correct just like we have previously, but that we're going to correct just as hard. We set new lows over here as we did over here, and it looks like we're going in for a 3rd time. So as we top out at a very similar range, this means that we're going in for around, somewhere between a 28 to 30% reduction, somewhere in this ballpark between the lows. I really think this is where we're going to see price come down in this case, somewhere in this range. The least bearish case scenario is somewhere around 5,800 and then all the way down to 5,600 points on the NASDAQ. Now we can look at the Dow Jones. You can do a very similar thing. I'm basically just taking 2 major lines of support here from 2 different sections of the lows. You can really determine which ones you wanted to use, if you want to choose one. But I like to use both and almost build a range that I'm going to be watching in this case. So I'd like to know what you all think about this. I think this was quite predictable. As we talked about, it would depend on what the Fed decided. And the Fed decided to keep rates the same. They didn't provide relief when markets needed it most to push out to new highs. So I think the game's up for equities. And even if they do cut rates, I feel like the relief rally is going to be short-lived. It's not going to be something like this unless they cut down to something like like 150 basis points from the 200 to 225 that we're currently at right now. So, as I said, I want to know what you all think about this. We've got lots of interesting things going on right now, but that's going to be it for the update. Let's go ahead and dive right into our interview with Scott from Masterworks.io. What's going on, everyone? Nicholas Merton here from DataDash. On today's daily update, we have a sponsored interview with a very interesting project called Masterworks.io. I'm here with the CEO and founder, Scott. Scott, thanks for taking the time to come onto the channel. Can't wait to talk a little bit about what you're doing.
Thanks for having me.
Awesome. So I want to start off, to tell you a little bit of background about myself and everything. As an investor, I've traded in a few different types of traditional markets. I've traded stocks, crypto, all kinds of stuff. But the one thing that I would have never guessed was a market until about 2 years back was this kind of vintage art market or collectible art market that is this kind of unseen market that I think everyday retail investors don't really get to see. So could you give a little bit of background about what this space is and some of the problems with it at the moment?
Sure. Yeah. So I think, if you think about the art market today from a very high level perspective, there's $1.7 trillion in assets. And that's a number that's published by Deloitte and has been confirmed by others. And then this year, roughly $68 billion in art will sell. Out of that $68 billion, and this is a number that's pretty interesting, roughly 62% is what we call blue chip art. So that's art created by the top 100 most selling artists. So those are household name artists: Picasso, Warhol, Monet, artists that people have heard of. So if you look at the blue chip segment overall, the investment characteristics are very interesting. So blue chip art has outperformed the S&P for the past 20 years. If you look at different studies on correlation, meaning how does the art market track other asset classes like the S&P, the correlation factor is about 0.1 or 0.2. But the problem with the asset class has been historically the only way you can invest in it is if you buy a multi-million-dollar painting. Mm-hmm. So it's to us a natural asset class to securitize and allow people to purchase shares in these great works of art, which has never really been done before.
Yeah. I mean, to build on this, Scott, you brought up a few good points there. The first off factor is that you have a big issue. It's this kind of like secretive, kind of exclusive market that was usually only available to accredited investors, in this case, or institutional investors. And then you also have another thing as well, is that this market as a whole has been outpacing the S&P 500. I think you said it was around like 180% on the statistic I looked at, comparative to the S&P, which we all know has done really well over the last decade. So I think being a kind of conduit for a lot of institutional money and money to kind of go as a safe haven to store wealth in a sense, I think it's been a pretty profitable market. So you guys are aiming to basically tokenize it, and as you mentioned, you're opening up the floodgate in this case to allow retail investors to finally do it now that the regulatory framework has finally opened up over the last few years.
Yeah, that's right. So the offerings today are filed with the SEC under this format called Reg A, which allows both retail investors as well as accredited investors to invest. So really anyone can purchase shares in these paintings.
Interesting. So, as we're talking about doing some of the first few paintings and everything, I'm no expert in art. I have a few friends who are much more passionate about it, but I'm curious, to see like what are some of the first kind of paintings you guys are launching. And I'm also curious as well, I understand you're going to have individual paintings and everything, which would be good for people who are more savvy and like to pick like they do with individual companies. But is there going to be basketed ETFs? You mentioned about these kind of blue chip paintings. Is there going to be a way where I can hold, for example, maybe 10 paintings down the line?
Yeah, that's a great question. So we are actually releasing a product in the very near future, probably the next few weeks, for accredited investors that will give them exposure in the Masterworks fund to multiple paintings. So today, the first painting that we launched is an Andy Warhol Maryland painting, which is really his most iconic image that a lot of people are familiar with. We also have a Claude Monet 1881 landscape. It's on the platform as well. And then the third offering will be this fun product, really to address the use case that you just mentioned.
Awesome. Cool. I mean, that's the thing for me. Usually when I take on these new markets or one that I'm not too, invested in per se, I think it'd be awesome to see an ETF product down the line. But I think it's interesting you guys are starting to tackle some well-known paintings and just give people an opportunity of exposure. I've started to see some startups kind of going down this route. I've seen it in like venture capital, but in this new immersive market, which again, I mean, $1.7 trillion of wealth is locked up in, it would be awesome to at least be able to capture some of that as an investor. So I mean,
Yeah,
yeah. Oh, sorry. Yeah, go on.
yeah. No, I was just going to say, yeah. So it is interesting when you look at, I guess when we talk about or think about allocation and how people should allocate to the asset class, really the only firm that's done research on this was Citibank in 2015.
Mhm.
And Citi concluded that the ideal portfolio, depending on the percentage of illiquids in that portfolio, would hold somewhere between 1.4 and 4%
Really?
R, which is super interesting because the only way that you can allocate to the asset class today, again, is if you're purchasing whole paintings, right? So if you think about the minimum price of a blue chip painting in today's world, is probably, I don't know, like $1 million roughly, right?
Right.
So you think about that 1.4 to 4% allocation, portfolio size has to be quite big if you're buying whole paintings to allocate to the asset class.
That's
Uh,
incredible. Yeah, I mean, you need to have some kind of conduit as a retail investor to get into that. You can't buy a whole $1 million painting. And that's if you want to get really into the best performers, which are the blue chips in this case, as you're talking about kind of like blue chip companies. But it's interesting. I mean, like, so I'm curious, asking with your background in this kind of focus, Scott, what got you into this kind of topic? And also, when did this market really start to form? You said over the last decade, it's been one of the best performing asset classes. This year, I think on par with crypto, it's been one of the best performing ones. Where did you get your start in all this?
yeah, it's a great question. So I've been starting technology companies for the past, I guess almost 20 years now. It makes me feel old saying that, but I guess since the mid to late 90s, eventually, or initially in casual gaming, and then eventually online advertising, fintech. Most recently, the last company is a company called Payability, and then Masterworks. And during that entire period, I've also been collecting art. So I've built an important collection in the U.S. of post-war artists like Pollock, Rothko, Klein de Kooning, names that a lot of people have heard of. And I think throughout that process, just sort of learned and appreciated how art as an investment is really compelling from a risk-adjusted perspective. I think it's one of the few asset classes where you don't take a tremendous amount of risk, but can still receive equity-like returns. And that's I guess sort of the interest or the passion behind Masterworks is how do you take this asset class, which really people have been investing in for thousands of years, right? I mean, people have been investing in art for centuries, and make it available to everyone.
That's the thing I thought about, Scott, is like it's almost kind of like a company or a startup in that case, whereas usually you have multiple rounds and multiple buyers who usually have more and more interest in it over time. It's a company or startup that doesn't die so long as it's still there and it's preserved, and to be able to tokenize and have partial ownership in that almost kind of guaranteed long-term class in a sense. It's very, very
Yeah,
interesting.
yeah, it is interesting, and like a lot of people talk about with crypto, kind of the supply, the controlled supply dynamics, of how a lot of these coins are engineered. But the art market is somewhat inverse of that, in that if you think about a given artist, take an artist like Monet, every single year there's fewer and fewer Monets available because people are donating these paintings to museums.
Mm-hmm.
So part of what drives art prices up over time is that you have a declining supply. It's not even a stable supply. You just have a declining supply
It's purely
of
deflationary.
assets,
Yeah.
which I think does help drive up prices.
That's interesting. Yeah. So going on to that point, Scott, as we want to get people on board, I think you had told me you had around like 16,000 users already registered when we first started contacting one another and everything. It seems very interesting that you guys already have that many people kind of interested in tackling this market themselves. Where can people go to like try it out, get registered? Is it easy to onboard as a user? Do you need that much information?
Yeah, it's super simple. So www.masterworks.io. I think onboarding and investing takes less than 5 minutes. So it's really just creating an account and then entering a payment method and purchasing. But very straightforward. And then, if people are interested in really diving into the details of what an offering looks like, they can go to the SEC's website and search for Masterworks and read the full public offering of taking a painting public.
That's awesome, man.
Kind of interesting, yeah.
I'm interested because we've been talking about tokenized assets for like 2 or 3 years now. It's been kind of like a buzz topic in the crypto space, And even just like taking the slow steps and everything, I guess it's under the works of Masterwork right now. But then again, you have to make sure you're pairing with the regulation, and then over time, you guys can start to expand this out into other things. So, Scott, I'm excited to see what you guys do over time. If any of you are interested in engaging with Masterworks and trying it out for yourself, getting a little bit of exposure to the art market, I'll be sure to leave all the links down below in the description. Scott, is there any kind of final things that you think people should know about or look into?
No, I think that's it. I mean, we publish a lot of information on art as an asset class in our resource center on our website. So outside of investing, I think it's a great place for people to go to just learn about the asset class.
That's awesome. I've got a lot to learn myself. I've got to like build up my art connoisseur. So I'm too crypto and stocks and everything. I'm always looking at company logos and everything. It's time to get a little bit more etiquette in what I do and get a little more sophisticated.
Fair enough.
Thank you, Scott.
Well, thanks for the time today, Nick.